One of the wisest men that I knew in real estate, he said to me, it's better to own 10% of 10 things than 100% of one thing. And it spreads out the risk. You know, you have the funds to do it all by yourself, but most of the time, if you're talking a multi-million-dollar project, it's okay to bring in some partners and share some of the equity.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. Before we get into the show, I have some great news to share. This podcast has won an award from the National Real Estate Investors Association. Last week, Clay Powell, the RPOA's director, went to Provo, Utah to receive the Distinguished Excellence in Innovation Award on behalf of the RPOA. This award recognizes new and innovative ways real estate investor associations are communicating with their members. I want to thank the National Real Estate Investors Association for recognizing this podcast, and I want to thank the listeners. Without you, we wouldn't even be here. So thank you for listening, and let's get on with the show. Hello and welcome to episode 129. My guest today is Ratan Khatri, and Ratan has an extensive background in many different types of real estate investing, including single-family fix and flips and rehabs. He's done some multifamily, and he also completed his first syndication recently with the purchase of 50 single-family homes. Ratan is also the owner of RKP Management, which manages over 200 homes in the Muskegon, Michigan area, with an emphasis on helping veterans and low-income families. Ratan, welcome to the show.
Well, good to be here. Thank you for inviting me today.
Why don't you tell us a little bit about yourself and your background?
Well, my parents immigrated here to the Detroit area in 1970, and so I came here at the age of 9 and immigrated to a small town of Clawson, Michigan, over on the east side of the state, suburban Detroit. And I finished high school there, and then I went to Western for my formal education. I actually went to flight school there. I went to be a pilot and got all my ratings and licenses. That's also where I met my wife, and we've been together ever since. And I don't fly anymore professionally, but I am still a licensed commercial pilot. And then shortly after graduation, we moved back to the Detroit area, and then we decided to move out to the west coast of Michigan because we used to visit Lake Michigan when we were in college, and I said, someday we're going to live here. And a few short years later, we were living on the west coast of fabulous Lake Michigan. And then not too long after that, I started investing in Muskegon. When I was in the mortgage business, I got to know the town fairly well. And after the mortgage crash, I ended up buying a lot more real estate. And as it got cheaper and cheaper, I bought more. And then I started a property management company. And I've been growing that for the last several years. And as you mentioned, I did my first 50-unit single-family portfolio of syndication of rentals in Muskegon County. And we're looking to do more. And I've always wanted to get into mobile homes and self-storage, and I've been doing some homework on those avenues of real estate investing as well.
How did you go from being a commercial airline pilot to getting interested and beginning to invest in real estate? Well,
unfortunately, I never did make it to the big leagues of United or American. The commercial license allows you to charge, so I was an instructor. I also was a freight pilot in my younger days out of Detroit. And then when I was working in Muskegon Airport, I was also a charter pilot where I flew executives for Executive Air out of Muskegon County.
Wow.
So, so I still belong to the West Michigan Flying Club, and we have 4 airplanes there, and I don't teach anymore, but I am licensed to do all of the above.
So at what point did you get bit by the real estate bug?
Right out of college, pretty much. I read an article in Money Magazine about a dentist who was in the middle of a root canal, and his secretary came in to tell him about a toilet leak. So on his lunch hour, he went to go take care of the toilet leak, and then came back to do dentistry. And that was my first real estate article that I read in Money Magazine about people investing in real estate. And then I started doing a lot of research, and back in the late 70s, early 80s. The gurus back then were the Lowrys and the Robert Allens, and so I studied them, and everybody knows Carlton Sheets, and so I just studied all that, and then I started applying it. I bought my first home to live in a few months after graduating college, and we lived in that for about 6.5 years. And then when we left the Detroit area, I bought a home over on North Shore Drive in Grand Haven, and my wife and I, we flipped that about 10 months later, and then we bought another home on the south side of Grand Haven, and we've been there ever since. That's where we raised our daughter. And in the middle, I started buying investment properties. My first property I ever bought was a 7-unit apartment building in Muskegon while I was a mortgage loan officer, and then a 3-unit. So it didn't take long before I had 20 units in the 90s.
How did your properties fare during that period? Because you went from the 90s to, kind of the boom and bust of the dot-com era into the 2000s. And, of course, we had the big Great Recession in 2007, 2008. How did your properties fare during that period?
Well, I was able to hang on to pretty much everything. The mortgage business crashed completely. One day the facts started coming over. We're no longer buying loans. We're no longer funding loans. And so the mortgage business the lights got turned off one day. I owned a bunch of real estate, and then I was lucky enough to buy more when the prices went down. And during the crash, I only actually lost 2 properties. One that I was over leveraged on and over mortgaged on, I lost that one. And then another smaller property that between the timing and dealing with the lender and stuff, I wasn't able to hang on to. But I pretty much managed to hang on to most of the properties. And the surprising thing is, after the crash, rents actually went up because more people were looking to rent that had also lost a home. And the rents have just continued to climb in Muskegon County as they have in Grand Rapids.
A lot of people are starting to get interested in Muskegon. The numbers look so good there. You can still buy single-family homes for under $50,000, get that $700 to $900 in rent. What are you noticing on the ground?
Same thing. We have a couple of different municipalities in the Muskegon market. We have Norton Shores, Roosevelt Park, North Muskegon, and all the outlying rural areas. They recovered about 4 or 5 years ago in terms of valuations. And then we have the city of Muskegon and the city of Muskegon Heights that are still in recovery. And in my humble opinion, we're about 80, 90% back in the valuations in Muskegon, and we're probably about 50% back in valuations in Muskegon Heights.
And do you feel that there's still room to go after that?
There is. It continues to climb. I'm actually getting calls on properties that I don't even have listed because people are looking for homes. One of the things that, I have a debate with many, many people about is, whether we're at peak or not and whether there's another bubble or not. And what I see is the demand is really, really strong for rentals. And, people that have homes listed, pretty much they're gone in 2 weeks to 4 weeks if they're priced right and if they're reasonable condition. So the demand is just really, really strong. And unfortunately, nobody's building starter homes. And there's a lot of building going on in Grand Haven and Ottawa County and even some in Muskegon County as well. But those are, I'm going to say, on demand. Somebody's already got a loan for them. Somebody's already bought a lot. And there's a builder ready to build that person a home. But, back in the day, people were putting up 100-unit, 200 subdivisions on spec. And I just don't see anybody doing that in my market.
Yeah, I don't see that happening much in Grand Rapids either.
Right, and that's driving the demand. Household formation continues to climb, and new construction is not keeping pace with household formation. On an annual basis, there's at least a 500,000 unit gap between household formation and new construction permits.
The demographic trend is very positive for rental real estate because of the things you just said. There's not enough new inventory coming online to meet the upcoming demand.
No, there isn't. And the millennials are finally starting to buy homes. As soon as they get married and have kids, they leave the city life and they want to, get back into the suburbs or, They want a backyard and they want a basement and they want a garage and all that other good stuff. I don't remember the professor's name from Grand Valley, but I've heard him speak twice this year, once at the Muskegon Chamber and once at the RPOA convention just recently. And he is talking about a drop-off in employment, not because employers aren't looking to hire, but just because the pool of available people looking to work is not there. And also, he does talk about a recession in 12 to 18 months, but I just don't see it as being the kind of correction or the crash that we had recently. I think it's going to be a tapering off, but based on what I see in rents climbing in Muskegon, there's houses that not too long ago used to get $650 a month for. Now they're like $850, $900, and $1,000, and people are, fighting for these houses. So as soon as at my management company, as soon as we get a house ready to occupy, we put it on our website. And, within a week or so, it's gone, and we have half a dozen people applying for the same property. And so I just see the demand continue to increase, and those of us landlords that were able to hang on to our portfolio have more than recovered any valuation losses and or rent losses, because the rents just continue to climb.
Paul Isley is the economist from Grand Valley State University, and he did make a point as well that any dip or recession would be very specific to the locality. So here in West Michigan, we're much better positioned to weather the dip or upcoming recession or whatever might happen in the next 18 to 24 months, as opposed to other areas that are way overinflated. And you hear about San Francisco and
Los Angeles. The rents have climbed like 20-30% just in the last 12, 24 months. And rents have climbed in Muskegon, and I know that I'm not familiar with the Grand Rapids market, but I know they've climbed there as well. Just the previous crash was caused by too easy a money and too easy a financing. And, I see some signs of that coming back, but I just don't see it to the degree that we used to, where anybody that could fog a mirror could get a loan back in the day.
You've got some rehabs and flips going on. Tell us about those.
Yes, I have about a half a dozen rehab and flips underway as we speak. And they're in a couple in Lakeside, a couple on East Muskegon, and we've been working on these projects with just organic cash flow, because the banks aren't lending like they used to. I used to have a line of credit, and I don't anymore, so now everything is from organic cash flow. But
explain that organic cash flow. What does that mean?
My meaning of it is money that's coming in from rentals, and also money that I have sold a couple of projects lately, and that is helping fund and close out some of these projects that have taken longer than normal to finish up. I used to turn about, a house around in anywhere from 2 to 3 months. Now it's taking a lot longer because I just don't have the line of credit that I used to be able to just write checks with. So, but we're getting to the point where we'll have 6 projects online this year. And when those sell, we're going to use some of those proceeds to, do more flips. And so we're using less bank financing as the main point of that.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. So give us a sense of the numbers that you're looking at in your rehabs and flips. How much are you buying the property for? What kind of money are you putting into it? And what kind of profit do you expect to make?
Well, if I may, pre-crash, typical scenario was you buy property for the mid-20s, you put mid-20s into it, and used to sell it for, mid-70s inside the neighborhoods that I was speaking of. So me and one of my business partners, we currently have a project in a community of Lakeside, and we purchased that roughly for mid-20s, but we put about 50 into it because it was a top-down rehab, new roof, new wiring, new drywall. Just everything was gutted, and it's all brand new. And so that one I would say we easily have 50 into it, and we're going to put it on market next week for 139.9. So the numbers have changed a little bit. Plus, this property is in a, shall we say, a more desirable area. And then I have other projects in my Muskegon neighborhoods that are selling, for mid 70s to low 80s now. So as I said, I've been getting calls on those projects as well. We just picked up a property in the East Muskegon area, and we were able to get that for 13. We're going to put about 20 into it, and I'm thinking it's going to sell for either 89.9 or 99.9.
It looks like you're shooting for anywhere from 60, 70% to over 100% return on your investment.
Well, yes, and it's not always a home run, but I used to shoot back before the crash for at least 25, and that was pretty easy to do in the neighborhoods that I was working in. But when you go into some of the more desirable neighborhoods, it's possible to make 50 or 60, if you buy the property right. So as the old adage goes, you make your money when you buy.
And are you having any trouble finding those properties to buy, or is there plenty of inventory for you?
The inventory, the easy, low-hanging fruit, as it were, is not available anymore. Most of the projects, they're total rehabs. You're not going to find a project inexpensively that just needs carpet and paint. It's those projects are diamonds in the rough. You're not going to find too many of those. So there is quite a bit of inventory that requires total rehab, top down, new everything, new plumbing, new electrical. And then I also put air conditioning in all of my properties. I'm just getting air conditioning put in this week on a property that's finished. And, that's going to add another $2,000 to the cost, but I think I'm going to make more than that up on the backside on the sale.
Is it central air?
Yes.
So you're adding central air. You made that decision. How much is that costing you to put in, and what kind of value do you think it's going to add to the home?
I think it's going to bring another 5 to 10 in the back end value. And the furnace was already new in this particular unit. I put that in last year, and it was a rental for me. And so it's no longer a rental for me. It's been sitting vacant for about 6 months, and I've been rehabbing it, little by little. And I decided to add air conditioning to it. And I was quoted about $2,000. And I know that's low for Grand Rapids values, but that's what I can get it done for in Muskegon. And I really think it's going to give me another 5 or 10 on the back end.
Okay, so definitely well worth it, putting in a little extra money to get 2 to 3 times that amount in the sales price.
Well, even before the crash, I used to, when I did a new furnace, I would just add central air to it. And that was one of the primary taglines. I would put central air. And those houses always sold really fast because I know that we don't need central air that many months in Michigan, but it's an amenity that people really do enjoy having that they don't have to pay for, out of pocket to get it done.
Now, I know that you own some multifamily and you're interested in purchasing more multifamily. Tell me what's going on with that.
Well, last summer, me and 2 other gentlemen that you have interviewed previously on your podcast, we got together and we bought a 50-unit portfolio of single-family homes from a retiring landlord. He had turned it over to his family for management, but it did not work out too well, so he put it back on the market, and he offered terms with only 10% down. So me and Gary and Stephen, we had to come up with 10% down, and which come out to a little over $100,000, and we turned it over to third-party management company, even though I own a management company, because my funds came out of my retirement account, so I couldn't touch the properties. Plus, we wanted to avoid any conflict of interest. And so we've had that project going on 8-9 months, and we actually have an offer to buy it. And so we're in the process of, getting the buyers getting financing, and we're hoping to close on it on August 1st. So we will have seasoned it for 12 months.
This was a portfolio of 50 single families?
Yes, and 55 units in total because some of the properties were duplexes.
So you syndicated and raised about $100,000 to be able to purchase this?
Yes, and we set up an LLC. We went to a local attorney. He drew up an operating agreement to make sure all his partners were on the same page. And we had all our clauses in there for, what if this and what if that, and, somebody wants to buy, somebody wants to sell. And so we had all that laid out because, even if you have good friends for partners, you still want to have everything documented so everybody knows where everybody stands at any one time.
What is the value to you in syndicating a deal like that rather than taking it down yourself?
Well, one of the wisest men that I knew in real estate years ago, he said to me, it's better to own 10% of 10 things than 100% of one thing. And it spreads out the risk. And I'm looking to do more portfolios like that. And that's how people do large office buildings, and that's how people do large multifamily 100-unit, 200, 300-unit apartment complexes. Sometimes, you have the funds to do it all by yourself, but most of the time, if you're talking a multi-million-dollar project, it's okay to bring in some partners and share some of the equity. So same thing with our flying club that I mentioned earlier. I belong to the flying club. It's very expensive to own an airplane all by yourself. So we have a 60-member club. We all pay our dues to cover the fixed costs, which is insurance and hangar rent. And then we pay for what we use. And, an airplane alternator can cost upwards of $1,000. And, if you own an airplane by yourself, then you'd have to pay for that entire expense yourself. But if you have 2 partners or 4 partners or 60 partners, then, the cost is reduced substantially for an individual person.
What was it like syndicating the deal with the 50 different homes?
It was pretty simple, actually. I guess more people would call it a joint venture than a syndication because I didn't have to go too far to raise the necessary capital. One of the partners could have done it all by himself, but he didn't want some of the properties and some of the areas that they were in. But I convinced him the next day that it was okay to do that, and he came along. And a lot of people, when they do a syndication, they do like a 70-30 equity split or 60-40 equity split with the investors. Ours is a straight 1/3 equity split. And so if I find another deal, I'm looking at Jackson, Michigan, for example, and depending on what kind of terms they want or what kind of financing is needed, we'll raise the necessary capital to, have the down payment to be able to buy a portfolio like that, or in the future, maybe a mobile home park, or future, maybe a self-storage facility.
What is your goal with this portfolio that you purchased?
Well, my goal was to hang on to it for a lifetime of cash flow because the top line cash flow has gone up more than 30-40% since we acquired it. And, it's performing really, really well. We put every penny back into rehabs and taking care of any deferred maintenance. But my 2 younger partners, when an offer came along, they were anxious to go ahead and sell it. So we're going to, my 2 other partners are going to do a 1031 exchange with their shares. Mine is going to go back into my retirement account. And I'm going to take a quarter and put it into mobile home syndication, a quarter into self-storage facility, and a quarter into multifamily syndication, and another quarter into assisted living facilities. And I've already identified 3-4 different players in those different fields that I'm comfortable investing with.
Okay, so you're not going out and finding those deals yourself. You've got other sponsors of similar type syndications that are looking for investors like yourself.
Yes, and I'm also looking for deals of my own. As I said, I'm looking at a couple of deals in Jackson, Michigan, and so I'll be looking to syndicate those myself. And if I have the funds to do it myself, I still will probably partner up with several people to spread the risk.
You're looking in Jackson, Michigan, a similar type situation where you pick up a portfolio of single family homes? Yes,
I was there recently, and there's 3 good-sized landlords there. One has unfortunately passed away, and his son is trying to keep the portfolio together, and we've already had communication. And then another landlord who owns 85, he has 2 sons that are not interested in his business. And then a third party that was introduced to me through a management company. And, they're all retiring or want to move to Florida, like I'm visiting my dad in Florida right now. So everybody wants to eventually retire and sell their portfolio.
Finding an opportunity there then with owners who are at that point in their investing where they're ready to retire and sell.
Right. The gentleman that we purchased the Muskegon portfolio from, he vacations in Florida, quite a bit. And so Stephen was actually talking to him before the rest of the public even knew about the portfolio while the gentleman was on the golf course. And he specifically offered terms, on a land contract, because he wanted cash flow for the next 15 years. And, he didn't want to take a lump sum of cash and pay tax on all of that. And he decided to sell it to us because all three of us had a lot of experience in the real estate business. All of us owned a big portfolio ourselves. And he was really comfortable selling it to us. And the deal was pretty easy.
That's a really interesting angle on that, is that you were able to purchase that portfolio with a land contract, meaning you didn't have to go and get financing from a bank and get appraisals on all 50 properties. You were able to just work directly with the seller to not only acquire the properties, but get the financing from him as well.
Exactly. And, as I said, he did not want a lump sum of cash. And he wants the continued cash flow, which is the reason, it's a good reason to sell property in a land contract, whether it's a single family home or one single commercial building or 50 units, as this was. Eliminating the bank from this picture was a huge, huge benefit. We did our own due diligence. Of course, we checked title on everything, and that came out clean. We checked all the occupancy certificates, and that came out clean. All the back taxes were current, so that was clean. And we knew this landlord, and he had a great reputation, and has a great reputation. And so we were comfortable in the package that we were buying. And all of us were familiar with the properties that were in our own backyard, so we know the market really well.
Now, with the properties that you're looking at in Jackson, Michigan, the portfolio, would it be a similar type situation where you could do a land contract?
I'm hopeful that might be the case, and if it is, fabulous. If it's not, then if we have sufficient down payment, you can get local bank financing or regional bank financing. And so I cross that bridge when I get there, but I'm talking to all three parties in the expectation that we're going to get terms.
Not only are you looking at picking up more portfolios and doing more syndications, but it's also interesting to me that you're looking at new niches in real estate investing, senior living, mobile home parks, and self-storage. Why are you interested in those areas, and is it difficult for you to make that leap from active investor to passive investor?
Not at all. I'm not as young as my two partners, so my wife wants me to retire like yesterday. And I don't know how I'm going to cope with all of that because I'm a very active person. But I have identified some very strong individuals that are in those niches, and I'm very comfortable investing with them. It's not going to be a direct equity position in some cases, which is what I'm actually looking for. But the senior living, there's 10,000 baby boomers a day retiring, and the demand for senior housing is going to explode. The self-storage, more people are getting out of their large mansions and into smaller and smaller apartments and smaller condos. And the self-storage facilities are going to be booming as well. And same situation there. A lot of retiring operators in the self-storage field, and their families don't want the businesses. And so I know many people that are, selling those and getting terms on them. And I've always been interested in that. And I've just been too focused in Muskegon, so I'm starting to expand my wings and horizon a little bit. And then as far as the mobile home goes, I think there's going to be a disparity between people that can afford housing and lower income folks that can't get into standard housing. And I think that even in the retirement communities, mobile homes are very popular, especially here in Florida, for example. And there's a lot of retirement communities that are being built up with manufactured housing. So all those fields are going to, I think, continue to explode. The multifamily space, I think, has peaked out in terms of pricing. The cap rates are in the 5 and 6s now, and That's a highly leveraged and highly risky thing to get into.
So you believe that? You think multifamily's kind of played itself out?
It's never going to go away, but I'm saying I think it's, in my humble opinion, I think it has peaked. I think even in Grand Rapids, I heard that some of the larger, newer complexes were offering gift cards of $2,000 and $2,500 as incentive to sign a longer term lease. So when the incentive starts showing up in the rental leasing offices, that particular market has peaked. Well, Grand Rapids is a unique market because the employment situation with the medical and the technology is just booming, and there's more people coming there. It just as that economics professor said, Grand Rapids is seeing an influx of millennials, and so is Muskegon, which is what's driving the housing demand, I think.
Well, that brings up a really good question for you because you own a property management company. So what kind of challenges are you facing right now in this market?
The toughest thing is in the Muskegon market is finding qualified candidates. We turn away roughly 80% of the applicants for the available housing that we have. And we do a background check, and if they have an eviction in the last 4 years, it's pretty much an automatic denial, unless there was an extenuating circumstance such as domestic violence or, perhaps a fire or something like that. And so even though we're turning away 80%, we are finding some really good candidates for the existing rentals that we do have available. And turnover has decreased substantially because a lot of folks realize they have to pay their rent. There's no place to go, and if they get an eviction on their record, it's very difficult for them to go find another place because A, there's not that many places available, and B, all the landlords and all the property management companies in Muskegon have adopted the philosophy of not renting to somebody that had a recent eviction. And unfortunately, for generations, people would get evicted, go to DHS, get the first and deposit and rent, and go to the next landlord. So I used to think it was DHS's fault for enabling folks, but I came to the realization that it was the next landlord that said yes that was enabling the situation. So I teach at the local landlord association conference every month, and I started drumming into everybody. We have to say no to somebody that just got evicted by somebody else, because if we say yes, then that behavior is going to continue. Kind of like if mom says no and dad says yes, the behavior is going to continue.
So have you had an effect with those teachings?
Yes, we have. The turnover rate in my company, and from what I hear from other landlords, has decreased substantially. And, the quality of the housing has also improved because all of us landlords that are in the business today, we have to comply with local city regulations, and so the properties are in better condition. The code work that is required is more stringent today than it's ever been. I sometimes don't like all the enforcement situations, but in the long run, it does benefit the community, it does benefit the renters, it does benefit the landlords, and turnover is less and less. Because as you know, every time you got to turn over an apartment or a house, it still costs anywhere from $1,000 to $5,000 to turn over a unit if you have to do carpets and paint and any damage and doors and windows and screens. It just adds up. So if you can lessen your turnover, then you're going to increase your yield, increase your profit. So we do have a lot of people apply that have been evicted, and we just say no.
Do you manage other people's properties? Your management company is RKP Management. Is it
yes.
Open to other investors?
To other landlords, yes, that want to have their properties professionally managed. I have a great crew. I have a great in-house staff, and I have some great folks in the field that take care of our properties. And then we have licensed contractors for our heating and cooling and plumbing and electrical, and because permits are required for pretty much everything these days. So I have a great in-house team with my manager, my bookkeeper, and my broker. And we manage just under 200 units, including 30 of my own.
As a business owner, And obviously, owning real estate investments, that's a business in and of itself, but you also own a management company. What are some of the day-to-day survival strategies that you employ to keep your business thriving?
Well, in years past, I've had several other businesses and the mortgage business, which, the tide came in and took everybody out. But, business in general, the lessons that are old and tried and true are is you got to have reserves. If you don't have reserves, any blips in cash flow or any discontinuations in cash flow, such as a tornado or winter storm, can affect you. And you have to be able to maintain payroll. You have to be able to maintain overhead. If you don't pay the phone bill, obviously phone calls can't come in. If you can't maintain payroll, obviously people aren't going to be willing to, work for you. So the challenges every day are making our tenants happy, making the city happy, making our landlords happy, and then making the courthouse happy. It's an ongoing challenge in the property world, which is why I always tell people, whether you own one property or 10 properties or 100 properties, hire a professional management company. We did that with our 50-unit portfolio. We went to a third party because all of us were associated with management companies. And so the main challenge is to keep the cash flow going and have some reserves to rely on. So if you don't have a line of credit or if you don't have physical cash, any kind of blip in the system is going to cause you, severe interruptions.
When you say have some cash on hand, do you have a rule of thumb as to how much you would recommend?
Well, for the average landlord, they should have at least $1,000 to $2,000 per property just sitting in reserve. Because if a furnace goes out or a water heater goes out, if you don't have a credit card or if you don't have a line of credit, you're going to need to get that installed right away. And you might be able to get terms from your contractor, but most contractors want to get paid as soon as the job is completed. So I would recommend at least $1,000 to $2,000 per property in reserve. And that way, if any emergencies come up, which they always do, and I don't know how, but tenants break doors and windows too. I've lived in my house 30 years, never broken a door, never broken a window. But it seems like every time I turn over an apartment, I got to fix a half a dozen windows or a half a dozen doors sometimes.
So, Ratan, as we get close to wrapping it up here, you're in the process of writing a book. Can you tell us a little bit about it?
Yes, I've decided I wanted to talk about the immigrant experience and why immigrants succeed more so and at a higher level than, shall we say, the local, population that was born and bred here. And over my years and years of living in this fabulous country, I have observed my Indian immigrant community and how they raise their children and what they do and how my folks raised us. And some of the differences that I've seen with people that have been here for generations and generations. And a lot of times, you've heard the old adage, America is paved, the streets are paved with gold. And it's funny that I have observed immigrants see the gold, whereas people that are born and bred here for generations don't see the gold. And I always found that interesting.
What does that mean? Immigrants see the gold, whereas people born here don't. Like, what specifically can you point to?
It's just a matter of opportunity. America is the land of opportunity. I have traveled extensively all around the world, and I've been to other British colonies, Australia and Europe and England, and they have the Western culture there, but no place then in the United States of America do you have the level of available opportunity for doing anything that you want to do. And I don't know if you're old enough to remember the Vietnamese boat lift, but people came here from Vietnam that couldn't speak the language, didn't have $5 in their pocket, but some of them became multimillionaires within 10 years. And then I've seen my Indian immigrant community in the Detroit area. Their focus is on education. The kids are pretty much forced to get A's in school. B's are just not acceptable. And so a lot of Indians are doctors and engineers and now computer scientists, and they expect their kids to do the same thing. So the focus is on education rather than other things. And then the entrepreneurial spirit in immigrants, I think, is at a larger and higher level than in the local born and bred population. And when you have your own business, I think you have more opportunity.
Oh, really fascinating observation. I mean, what is it about America then that's different from other countries in which immigrants are able to thrive and flourish the way they have?
Well, that is a great question. And when I travel back to India, my cousins always ask me, what makes America so great? And I tell them a couple different things. The number one thing is is the rule of law. A lot of other countries don't have the rule of law that we have here. We've all heard of corruption in other countries in South America and the Far East and things like that. I'm not saying it never happens here, but if you own something here, or if you create something here, or if you invent something here, you get credit for it. You can protect yourself. And if you have a patent on something, for example, that you invented something, in other parts of the world, somebody can easily steal it from you and take credit for your invention. In America, it's a lot harder for somebody to steal your invention. And therefore, if you create something that people want, you are the one that's going to profit from that. You are the one that's going to benefit from that. Whereas in other parts of the world, you're not as protected.
So when will your book be out?
I finished writing it last year. I'm in the process of editing it right now. Sorry, I got tongue-tied. And then I'm looking to find a publisher. I've talked to several other people that have published their books that are in the real estate field. And my book actually is part of a journey from the businesses that I've had and some of the failures that I've had and why those failures occurred. And so I'm laying out a kind of a business plan for folks that, especially younger kids. I teach my nieces and nephews, and I've taught my own daughter about investing in real estate. And so I walk them through the steps about, number one, immigrants are always frugal. And number two, they save money. And then they take that money and invest in something, typically their own residence. And then they invest in other things that are assets that produce cash. And eventually those assets give you enough cash flow to replace your job income. So the book goes through that. It's kind of a journey of my business failures and successes, and also how to protect yourself in an environment and having reserves. And so I'm hoping to have it published by the end of this year.
Why don't you give our listeners a way to contact you if they'd like to find out more about your property management business or any upcoming syndications that you might have?
Oh, very good. My property management office is in Muskegon, Michigan. It's over by the Lakes Mall, and it's called RK Property Management. We do have our own website, RKP MGT. We don't have very many listings right now because pretty much everything is occupied. I'm also personally on LinkedIn, so if anybody wants to find me on LinkedIn, they can. And I can give out my personal number if you like, and that's 231-206-1181. And yes, I will be doing more syndications similar to the 50-unit portfolio, and I'm looking forward to a great 2018 and 19 and beyond.
Well, Ratan, it's been a pleasure talking with you. Thanks for taking the time to be on the show.
Well, Brian, thank you for having me, and I look forward to seeing you again.
This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.